Hello guys, welcome to another weekly breakdown video. Today I will be breaking down the first week of June. Now it is officially very close to 1 year of completion. 1 year of completion of my backtesting, as I've started from last year's July 2023's data, and now I am on June, which is just 1 month away. So that's interesting. Just thought of letting you guys know. And here on the weekly time frame, we can clearly see, I will not explain all of this because we don't do that. The only thing that matters is what's happening now, right? So this is the lower high, lower low, lower high, lower low, high, low, higher high. So mark this supply zone. I mark the supply demand fair value gaps. You guys know by now what I do on the weekly time frame. So this was the weekly analysis. Nothing changed from the last week. As you can see, the same sort of thing, but the only thing that changed was the weekly bias was not clear. As you can see, it's a doji, and if I go to DXY to show you the bias, even on DXY the bias was not clear. This was the draw of liquidity if my bias is bearish, and the last week was bearish obviously. And this is the demand that I've marked. Break of structure, there's no supply zone because there is no change of character, market structure shift, which I've already explained. And DXY, the bias was not clear on the weekly. GU, the bias was not clear on the weekly. So that is when I go to the daily time frames. Simple. Now I have repeated these things for hundreds of times, so I have become a master. Literally, I've become a master in backtesting. I need to become a master in front testing now, because money is earned on the front testing, right? So you have to control your psychology, which I'm doing. You have to be disciplined in all realms of human endeavor. Yeah. So let me quickly show you the news before starting the backtesting. Monday there was final manufacturing PMI. Tuesday there was JOLTS job opening. Basically it was New York news throughout the week, but there was no GBP news, which is a good signal or a good sign. And also it was an NFP week, so we have to be careful because NFP week tends to manipulate. And on Friday there was NFP, on Wednesday there was NFP. So let's see. Monday also there was news. If I show you my FX book calendar, it's the same sort of thing. Monday, Tuesday, Wednesday, Thursday, Friday. The only GBP we can see is on Tuesday, which is also not at our timing, so we don't care, right? So that was the news. And now the weekly analysis has been done. So now before going to the daily, let me quickly show you the callouts. These are the conditions you don't want to trade when the market is choppy. Obviously the weekly bias is not clear. Obviously the weekly is giving a doji, but the weekly is rejecting from this sort of supply zone, which is a good sign, to be honest. The supply zone is getting respected. That can be an analysis, but I personally like to trade if the weekly candle closes as a decision candlestick, right? Because we adapt. We don't predict, we adapt to the conditions of the market. So these were the conditions. It was low probability. Obviously you can trade. Obviously you have the phone with you, you have the laptop, the markets are gonna move and you can trade, but you have to be very, very selective with your trade in this types of scenario. And it's not a coincidence here. We can clearly see the smart money banks knowingly push the market up before the high impact news, and then boom, news is out, manipulated all the buyers stop loss, and then made the main move with the bias. Yep, I have noticed something. For example, right before news the market was accumulating. News before half an hour to 1 hour of news, the market went up. Literally the market went up. What did the news do? News came down, took out all of the stop losses of these buyers right here, and also these buyers. Huge amount of selling pressure happened through the news, manipulated all of the buyers, and then the move happened. This is what the smart money tends to do. If you can understand this and you can be at the right side of the market most of the times, not every time obviously, you will be wrong sometimes, but most of the times if you can do that, you will be profitable. That's it. Just waiting patiently. Sometimes we can get our trade, like in this example. Yes, this was a Tuesday trade on fair value gap. The order block was not clear. I tried to trade an order block which was not in our session, which is low probability. We as traders, we want to put as much as more probabilities in our favor, right? The moment you start to not put the probabilities in your favor, that is when you start to lose. So this is the reason watching the price action on the hourly is so important. And yeah, only just watching the price action on the hourly would have would have saved us, or we could have avoided so many inducement on the M15. As you can see, we as traders, the most we can do is put the probabilities in our favor. So do as much as possible. That's why we only take high class setups, A class setups, right? So higher time frame bias was not clear on Monday, so just didn't trade it on Monday. Yes. So these were the call outs written throughout the week, what I've learned. And now we go to the daily time frame. So the bias was not clear. Whenever the weekly bias is not clear, I trade the, yes, correct, the daily bias. So on the daily time frame, on Friday the market didn't give anything. Last week was a kind of classic expansion bearish candle. Monday, Tuesday went up, Wednesday came down, Thursday, Friday made a reversal. So we don't know what the market wanna do, if it wants to go down or if it wants to go up. This is the condition where you don't trade the Monday. These are the conditions where I don't trade Monday. But if Monday was so clear, like last week, like this week, sorry, Monday was so clear, we could have caught a beautiful sell. The bias was so clear, and those are the conditions when you trade Mondays. But this is one of those examples where Monday should not be traded. And yeah, so on the daily time frame, I will not tell you why and how I mark these supply and demand zones anymore, because the video becomes very, very long, and each and every video I am saying the same things. I know how to do it, and if you want to learn, you can DM me. But yeah, so going on Monday, my bias was not clear. What I did, I didn't do anything. I waited for the market to close. So waited for Monday to close. Look, just waiting for Monday to close, yeah, we got our bias for Tuesday. This is very, very important. As you can see, waiting for Monday to close gave our bias for Tuesday. So now we have a clear vision of the market, what we want to do, what we want to see. Our checklist is now enabled, right? So even DXY was aligning. That is when I look for buys on Tuesday. That is when I go to the lower time frames, like the 4 hourly, and mark this demand zone and this H4 fair value gap. And we are obviously not swing traders, so I will go to the H1 time frame to mark some sort of demand zone. So I can spot one demand zone. I don't know if you can. There was a demand zone right around here. So waited for the Asian range to close. The demand zone did got mitigated. The demand zone was not respected, as this demand zone was not made in our session. Be very selective in the zones you trade. Only trade the zones that are made in London and New York session, because GBP USD is a London and New York pair. That is the reason you don't want to trade this. This was made on kind of Sydney session or not in session. So if you have waited for the H1 fair value gap to fill and then waited for the rejection, just like this fair value gap got filled to the T, as you can see. After filling up this fair value gap, a beautiful rejection candlestick happened here. And also, to be honest with you guys, this was a win, but before this win I also took a loss. I'm very transparent with you guys, and let me quickly show you the loss. The loss was, this loss taught me a lot of things, to be honest. So this was the loss on the M15 demand zone. I tried to take the trade from this M15 demand, which was very, very low probability. There was inducement, Asian low liquidity sweep, previous structure liquidity sweep, but there was no M15 kind rejection that we wanted to see, and also there was a huge H1 fair value gap. So why will the market make a move from here rather than going and filling up the fair value gap and then making the move? So we have to keep that in mind next time. If there is a huge amount of liquidity before the move happens, like previous day lows, highs are also one of those examples, but in this case there was a H1 fair value gap which was so relevant, and it made so much sense to go and fill up that first before making the move. So that is when, if you have waited, this could have been a winning trade. And yeah, we have learned a lot of things. And one more thing that I've learned is this demand zone was made somewhere around here. If the price, when the market opened, the Asian range did something like this, that is when I look to trade for this demand zone, because it doesn't make sense to come down here. But in this case, the bias was clean, everything was clean, no problem. But it just didn't resonated with me to trade this H1 demand zone, because there was just no enough liquidity sweep. But here, after waiting for this H1 fair value gap, enough liquidity got swept, beautiful rejection, put a limit order here, buy limit, boom, give our stop loss room to breathe. After doing all the steps, what you do? Get out of the charts, bro. That is when you get out of the charts, because staying on the charts is gonna make you confused. It's gonna confuse you rather than do anything good. and you don't want to make decisions based on emotions on business, trust me. So going on Wednesday, there was ADP news 5:45 p.m. and 7:30 p.m. there was ISM services PMI. So on Wednesday, now my bias is again not clear, but if I will be looking for something, that will be buys because of how that buying pressure is. And if I go to DXY, also it's looking like a bearish candle. As you can see, it has rebalanced the price to the T. On the daily, there is a small fair value gap, but I don't think that the market will go and take that small fair value gap. It can, but I personally don't think that. So obviously we don't trade the markets, we trade the beliefs, our beliefs about the markets. So going on the 4 hourly now, looking for buys again. The H4 fair value gap got filled to the T. This was a H4 trade, bro. If I was a swing trader, this was a H4 demand, came back to the H4 demand, filled up the H4 fair value gap to the T, beautiful, and then just stepped in the H4 demand zone, and then the move happened. So obviously this was a valid trade. And yeah, on the 4 hourly there is nothing. On the H1, let me see, even on the H1 there is no such thing as of now. If I am looking for buys, I will have to look for demand zones. So let me see, was I looking for something? So okay, so Wednesday I just didn't took the trade, I believe. Okay, so Wednesday I didn't took the trade. Why? Sometimes not trading is better than trading, as I always repeat this line that has a deep meaning behind it. On Tuesday my bias was not clear, and if I was looking for something, that would be buys, but there was no clear order blocks to trade from. Even if your bias is not clear, that there is a very high chance that there will also be no order blocks to trade from. And in this case, the thing that I've just said happened to the T. So on Wednesday the bias was not clear, waited for Wednesday to play out. Just waiting for Wednesday to play out gave us our bias for Thursday. And also this week was very, very tricky. As you can see, DXY filled up the small fair value gap. I thought it would not, but it did. So it shows that the market can do anything. We don't control the markets, so we can only adapt. So going on Thursday now, I will be looking for some sort of sells and some sort of buys on GBP USD. The bias, you can see, is so fucked up right now. It's just not tradable. The market conditions are not tradable right now. The 4 hourly is bullish due to this, and this, I consider this thing as consolidation or build up of liquidity to make a big move. And also this is NFP week, remember that. So this is when I waited for Thursday to open. On Thursday I am looking for buys. So look, this Asian range was literally trending to the upside. That is when I marked the closest demand zone. This is when I know that the demand zone might get respected, but in this case the Asian range was consolidating. That means the price needs liquidity. And yeah, if you can understand that things, bro, according to how the Asian range closes and according to if it's trending or if it's consolidating, which zones are high probability of getting respected, that is the exact reason why you are backtesting in the first place, right? I'm backtesting to figure out those things, and which I'm doing very, very nicely now, so I'm proud of myself. So okay, the callouts I've already shown, I guess. The callouts I've already shown, I believe. And on Wednesday I didn't do trade. It's not a coincidence, and these are the conditions you don't want to trade. Why I've written this, right? These are the conditions you don't want to trade when the market is choppy and there are no clear zones to trade from. Stay away from the markets and focus on some other things, like whatever your other enterprises are, right? The market is bearish, lower highs, lower lows on the hourly, and I am looking for buys. Does it make sense to look for buys when the market is bearish? And I consider this thing as what? I consider this thing as build-up of liquidity. But I marked this M30 demand zone right here because on the hourly this zone is this move is one move, but on the 30 minutes it's literally aggregated to different moves, and that is the reason why I marked this sort of demand zone right here. And also it made sense because the Asian range was trending, and as I've told you, when the Asian range is trending, that is when the most recent zone is high probability to get the move. So I was looking for some sort of previous structural liquidity sweep, Asian low liquidity sweep, demand mitigation, and then a move to the upside. So I was looking for that. Let's see if I got it. I didn't. So this was a loss. It was a genuine loss on Thursday. I should have not traded according to the market condition. On the live markets, whenever something like this is happening, I am gonna stay away from the markets. And yeah, whenever the zone is not clear, we can make something out of nothing. there is no such thing as something for nothing or something out of nothing. So I would have not traded this. And yeah, just it was a day. So this was a very tricky week, to be honest. Monday was huge volume, and Tuesday, Wednesday, Thursday was literally consolidation. And this weekly profiling is also known as bullish consolidation. And after sweeping highs, it can know, but I don't trade that. So the more things you try to learn, the more confusing it is. So fuck it. What you know is enough to become profitable. And yeah. So going on Friday now, my bias is again not clear. But looking at seeing the DXY, now it's looking like it's bearish. So going on Friday, I look for sells on DXY. That would automatically be buys on GBP USD. So that is when I go to the 4 hourly again to look for some sort of demand. The market is still trading between this demand and building up liquidity right here on the 4 hourly. And on the hourly, day by day, my skill of watching the market is becoming so clear. I can't believe it, bro. I can just by one instance say that if this zone is good, bad, if this trade is, if the market is playing out good, the price action is good or not. How? Through experience, through backtesting, through relentlessly backtesting day and night, and making videos, giving myself feedback. That is how you improve, right? So going on Friday, I was looking for buys, some sort of thing, and also it was NFP. So it was NFP, and whenever it's NFP, you have to be very careful. So waited. I was looking for buys, but there was no clear zones to trade from. Whenever the bias is clear, but the zone, there is no zones to trade from, I don't trade. Just I will not trade. That I'll make a rule. Whenever there is the zones are not clear, there is no clear order block, or there is huge amount of order blocks. You can see here, bro. Trust me. Oh, sorry. Tell the truth. Do you wanna be a part of the market conditions like this, where it is just going up, down, doing nothing? Right here you can see it was literally fuck all. It was not good at all. So that is when I waited for the news to come out, and I have noticed a very important thing right here. So you can see here the news. It is not a coincidence, right? It is not a coincidence here. We can clearly see the smart money banks knowingly push, and also the market was so choppy, waiting for the NFP to come out and then the market to catch a trend was so beneficial for us. As you can see right here, price went down, right? Price went down first at the NFP, swept all of this liquidity right here, and then I believe it goes up from here. Okay, it doesn't. So I guess on the lower time frames, sorry, really sorry. So on the M15 you can clearly see before the news came, what did the market do? Market went up, right? First it went up, took the previous day high, and then the news came in, swept all of these lows right here, right? There was huge amount of liquidity on Friday. Let me show you closely. Price went up first. This is not a coincidence. Price went up first, swept enough liquidity to make a move to the downside, gave fake move. The bias was also not clear, so many retail traders would have been bought here, and then the news came in, boom, swept all of these lows, liquidity from these lows right here. And then yeah, that was the weekly breakdown. It was not a coincidence, as I've told you. And let me show you the call out. This call out was on Thursday. These are the conditions you don't want to trade on Thursday. And on Wednesday, just waiting patiently. Sometimes you can get your trade, like in this example, this was H1 fair value gap. This is the reason watching the price action on the hourly is so important. Obviously, I've told this a gazillion of times. Watching the price action on the hourly has a double-edged sword. You will catch less trades. It will literally reduce your trades so less, but it will be of higher probability. So you wanna be less is more in trading, we know that. So I watch the markets on the hourly. Doesn't matter, right? I don't want to trade as much. I want to make consistent results. That's it. That's the goal. So higher time frame bias was clear on Monday, wasn't clear on Monday, so didn't took the trade. So these are the call outs made on each particular days. So this was the weekly analysis for you guys. It was a very detailed explanation. Hope you guys learned something. And also the last thing which I will put on right now on the weekly is, now trading the next week will be so fun and easy because the market was not clear. We didn't took the trade, or we didn't force anything, right? We waited for next week to play out. What did the next week do? Went up, took the draw of liquidity, and then gave a beautiful rejection. Why? NFP report came in favor of USD, and then a huge bearish candle, and also according to the technical it needs to make a higher low, and also there is a fair value gap. It makes so much sense next week to look for sells, pretty much look for sells right here. So let's see what happens, and yeah, see you on the next video. It will be a very interesting video. I'll try to explain it as thoroughly as possible, and yeah,